Karl Eggerss is chief trader at leverfrischberg.com and he joins us now live from the CME. Karl, a lot of people have the view that you can't solve the current crisis until you tackle housing and the banking crisis. Well, just on one of those fronts, $75 billion has been tipped in to help foreclosures, essentially keeping 3 to 4 million people in their homes. Does this measure go any way to solving the problem?
It does. It does. There are certain elements I like, and obviously there has to be something done. I think the problem has been that when people look at President Obama's policies, they say, why are you going to help out all those that are irresponsible and not help me who's been responsible? And I think it's very difficult to determine who that is. Some people were duped by bad mortgage brokers. Some people took on too much leverage. And so how do you determine which one's which? But really what I'm wanting to see, and I think traders are wanting to see, and I think it was evident in January and February here by seeing the stock market fall, they want to see that there's incentive-based programs. Give you and I tax credits to go buy some of these empty homes and to rent out, because let's be truthful, some people shouldn't be in homes that are in a home. But they may be able to rent them, but maybe they shouldn't be a homeowner. But let's give the people that have capital incentive to put the capital to work. And I think that's really what's been missing right now. Is no incentive.
Carl, the obvious question is then, how do you get some normality back to the property market when you're distorting both the supply and the demand side?
Well, that's it. I mean, if everybody had their way, we would probably see the market run its course and naturally go down to where prices are cheap enough to spur demand. But there's too many people involved and there's too much impact because the global economy is so tied to each other. So obviously, you were talking about earlier, can China lead us out of this? Well, can the U.S. housing market coming back lead us out of this? And they both have their place. I mean, obviously, all these economies are tied together. So, but in actuality, what's going to end up happening is until prices get to a price that is cheap enough and spurs demand, then you're really not going to get it. But what they're trying to do is obviously speed the process along just a little bit, and I think they may be doing a little more, giving a little more problems than they're actually helping right now.
Karl, getting back to investment themes and strategies, you said that you like commodities. Given the fact that we're going to see, I'm sure, continued distress in the financial markets, does that continue to make gold a compelling theme for you?
It is. I think gold right now, there is simply profit taking. If you look at, there was one of these technical places, it was a double top, they call it, where we're into the old high. It's pulling back. And I think you do have some tug of war of people saying, wait a second, why would we be buying gold when we're in a deflationary environment? But there's no question over the next 2 or 3 years, we're going to get inflation. No question about it in my mind. And I think money will go back into gold. And especially if the stock market, after this rally, however long it is, ends and starts heading back down, the fear trade will be back on. Money will go back into U.S. Treasuries, pushing rates down. And I think it will go back into gold.
Okay, interesting stuff, Karl. Just real quickly, we had the market coming back, Dow back above 6,800, S&P up above 700. But are you? Do you think this market has a further leg down?
Yes, I do. I think most traders are doing what I'm doing, which is shorted in January, covered our shorts. I covered them last Monday, and I was a little early. But now I'm enjoying the benefits of it. But I still have a lot of cash, and that was kind of the first thing. Covering our shorts, looking for what's going to make me put money to work, and seeing some technical things breaking out, things like the Freeport-McMoran that I mentioned in the previous segment.
Yeah.
That's all we're doing is trading right now. And if you're not willing to trade this market, you do have to keep being on the sidelines, unfortunately.
Understood. Karl, listen, great to talk to you, sir. Thank you for the time.